What's up, everybody? Welcome to episode 26 here on season 1. Today we are talking about why did I change my Acorns portfolio from a aggressive to a moderately aggressive, and why I'm considering changing it to a moderate account. Anyway, so on that topic today, by the way, check out the new microphone. Coca-Cola with the little thing right here, 4th of July weekend. You know, I'm going to be doing some grilling. Anyways, so yeah, the reason why I changed my portfolio from the aggressive or super aggressive account into the moderately aggressive account was because, first reason number one was there was way too much risk involved with having the aggressive account. Majority of my stock ETF money was into real estate on that. And not that investing in real estate is bad, but I didn't feel comfortable having about 25% of my money in real estate at that time. A lot of it is that was a huge part of my account, and so my account would fluctuate almost every single day by a lot, and I didn't really like that. Yeah, I still gained money, but if you know anything about markets and stuff like that, we're probably going to have a crash here in about a year or a year and a half. And then in about another 8 years from now, we'll have a real estate tank. So I feel like we're in a market that's just going to be stagnant for a little bit. And I don't feel like real estate investing is probably the best idea for me right now. Which moves me to my second reason, is that I wanted a more steady account. So my Acorns account that I have right now is definitely my biggest account, and because it's my biggest, I wanted it to be more steady. I have other accounts like on Stash and Robinhood and a few other accounts that are more high risk, and those I buy specifically just stocks or high risk ETFs. And so I wanted my Acorns account to be a steady stream of income or a steady stream of growth compared to my other accounts, which I could take a loss on. But my Acorns account, I wasn't willing to take or wasn't willing to lose as much as I had put in there. So because that was my largest account by almost twice, it's twice as large as any of my other accounts, I wanted it to be less risky. And so I dropped from a moderate or aggressive account, which is highly invested into real estate, into an account that's more into international stocks, small company stocks, and as well as there is a percentage that's invested into government bonds and corporate bonds, which for me is important because that's going to preserve your capital. Even though it's like I think it's like 15% of it is in there. When I originally switched my account, it was 26% was in corporate bonds and government bonds, but now I think because they changed it around a little bit, it's down to I want to say 16% is in corporate and government bonds. Which brings me to my third point, is the fact that I'm getting older, and getting older means that you want to preserve your capital a little bit more. So when you're 18 and you have $1,000 invested, it's all right for you to lose it, because you can definitely make that by the time that you turn 19 and reinvest another $1,000. So it's a little bit, you can definitely risk a lot more. So when you're younger, you have a bigger upside, but you also have a bigger downside, which is okay because you're young. It's okay to do that. Yeah, you could be a person that wants that steady stream of income, do a really conservative account, which would be like super high in corporate and government bonds. But you're young, you can invest and you can risk a lot of money because you are young. When you get older, you don't get that compound interest as fast, where if you're 18, you can compound it really fast and still grow an account that's going to be pretty large. So when I originally, like I said, I was 26 at the time when I readjusted my account, and the reason why I did that is because when you're the age that you are is how much you want to be invested into corporate and government bonds. So specifically on Acorns, like I was saying, is that it was like 10% on government bonds, and then 16% on corporate bonds. And so that was for the moderate account, the moderately aggressive account. And then for the aggressive account, it was like I think 18% or something. So if you were an 18 to 26-year-old, it'd probably be good to still be in an aggressive account. But because I was 26. I wanted to bring it down a little bit, and I did that. But recently they changed it, and so I'm kind of stuck between like this 26 or 30. At 30, I'll definitely adjust it down to just a moderate account, because it'll be about 30% into corporate bonds and stocks, or corporate bonds and government bonds. But for right now, I'm sticking with the moderately aggressive account. On that topic, though, I also want to let you know that you want to hold your stocks for about a year before you adjust your account, because you're going to have some sell-off of ETF and stocks, and you're going to be paying taxes on those capital gains. So make sure you hold those stocks for at least a year, so that way you're a long-term investor and you're not like a trader or a swing trader or something like that. So you're paying a less percentage tax on the capital gains that you made off of trading those stocks. So anyways, that wraps it up a little bit. I hope that explains it. If you guys have any questions about Acorns or investing in Acorns, feel free to comment down below. I'd love to tackle those. But let's go ahead and dive into the question of the day. The question of the day today has to do with plungers, and what are the best materials to make the world's strongest plunger? Well, I think that titanium is really strong, so I would definitely have a titanium rod. And then with the plunger part, I like the rubber. I like the idea of rubber. Just because you can really get a lot of like force in there. So I would definitely say stick with the rubber part. However, maybe like a silicone or something might work a little bit better, but rubber seems to be pretty well at lasting a long time. Like, I've never had a plunger break or the rubber piece break on my plunger. It's always been the like wood piece or the plastic piece always breaks off first. So switch it to titanium and then continue to use the rubber. All right. Anyways, if you haven't answered that question, I'd love to see it down below. If you have any questions for future episodes, go ahead and post those down below as well. We tackle every single one of those on the next episode. And don't forget to subscribe up here. Check out, if you're young, how to invest $1,000. And go ahead and check out this other cool video right here as well. And until next time, thank you for watching. I really appreciate it.